Hello, everyone, and thank you for joining another Genius Wednesdays brought to you by the CoinGenius team. Today is Wednesday, March 25th. The markets are still a mess, and we are joined today by Mr. Travis Wright and Mr. Joel Comm of the Bad Crypto podcast. And our entire Team Genius network is here for our roundtable. Today's highlights include education, commodities, and stimulus implications. We'll include a bit of a debate between Mr. Samson Williams and Mr. Sultan. We're also going to be talking about the behavior of commodities and how it's decoupling from its traditional behavior, and also hopefully the upcoming BTC decoupling and alts kind of standing on their own. So with that, I'd like to say a quick hello to the Bad Crypto podcast, Mr. Travis and Mr. Joel. Thank you for joining us today.
We tip our hats to you, Ms. Kristina.
Top of the morning to you.
Yeah,
So
not only are the markets a mess, but my place is a mess. It's weird because now that I'm quarantined, I'm not even doing laundry. I don't know. It's just piling up.
That's loud. We won't tell.
That's why you got a good background on there so we can't see.
That's right. You can't
Hey, nice plug, man. Excellent. Well, we have a full house today. We have Team Genius, which is, man, it's everyone. It's myself and Jeremy Bourne. It's Steve Quan, our head of market research. It's our advisors, our analysts. They'll all do a little bit of an intro, but this tends to be a bit of an organic conversation about what's happening. And we usually kick that off with our head of market research, Mr. Stephen Quan. And then he kind of sets the tone, and then we have a bit of a debate, lots of diverse opinions, and happy to crack some jokes in here. So we do try to keep it light. If at any point you guys need us to stop and explain a concept, we get it, totally fine. We wanted this to be very educational for your viewers as well. And you'll see folks kind of jump in and out on video as they're speaking here. So just bear with us, as this is one of our very first video conferences. That being said, Mr. Stephen Quan, I will turn it over to you.
Hi, everyone. Give me 1 second, sorry. So I first wanted to cover, I guess, how we got to these prices. And Kristina, can you share my screen by chance? Or
you hit your green button down there that says share screen is the one you want.
Oh, yeah, sorry. Okay. Everyone can see. So I'm just going to cover how we got here. Going back to March 12th, my name's Stephen Quan, and I've worked on Wall Street for about 20 years. We run a family office now, which includes a plethora of different assets, mostly derivatives and real estate, but a couple years ago started getting involved in blockchain. So here is kind of the event that caused this. So this is Tether versus US dollar. Tether versus Bitcoin. Most people would say, well, that doesn't matter, Steve, does it? Well, it does in this instance, and I'll show you why. Right here, Tether trades $1.07 versus the US dollar, and that really shouldn't happen since it's a stable coin. A 7% move in your most stable thing would imply that things are getting a little rough. So one event, coincidence. Now let's see if there's something else we can find. Give me 1 second. I was gonna go into a rant about Tether, but I'll keep it short. So here's Tether versus, here, let me make this screen bigger. I don't know how well you can see it, but in any event, this is Tether versus crude oil. Crude oil made a low the same minute that Tether made a high versus Bitcoin. You can see this little blue line. That's 107 in Tether. That's your low in crude oil. Let's look for something else non-correlated. How about coffee in Tether? I mean, that really shouldn't happen, right? Huge surge in Tether, huge drop in coffee, and there's your low. How about silver versus Tether? I mean, surely Tether can't have, and silver and coffee have no correlation. Well, they do in this instance, and this is how you get extreme tops and bottoms in many asset classes. How about the Dow? That's the Dow normally versus Tether. So we see this a normal smooth line. Now, moving on to the reflation trade. Once these bottoms happened and it was confirmed by Tether making an extreme high, which should not happen again, we got this flattening. You have to stop going down before one can go up. There's beans, coffee. Moving on, the most important thing that seems to have gotten missed in this whole mess was
Guys, they need to go out.
as the sorry, everyone can see. As we see here, the 10-year rate went from 170 down to 40 basis points, but the continuation for the sell-off and everything and why that was a delay on a rally, because the rate had to come down, hence bonds had to move again. So let's move again now onto the stimulus rally. Let's take a look. There's coffee up 30% in the past week. Here's feeder cattle, limit up 4 days in a row. Oh, they're up 25% this week. That's a long dated chart of RBOB or gasoline. It dropped from $1.80 to 38 cents at one moment, and I'll tie that in. There you can see 37 cents to 54 cents. So if anyone says, I think gas is going to be under $1, it's well under $1, but you'd have to go with the right equipment to New York Harbor and take delivery. And I don't think most people are going to take delivery of 42,000 gallons. And that's only a one lot. So let's take a look. There's the Dow reflation trade. And I'm saving crypto for last since we are on a crypto-based podcast, and I think it's a very telling story. Wheat, silver, gold, seeing a lot of similarities. Bitcoin was actually one of the first things to bounce up. It happened a few days before some of the more, I guess, established asset classes. Now, I want everyone to look at that. So 4,100, 3,800-ish to 6,800 today. Nice gain. So generally speaking, since it's 65 to 92% of cryptocurrency, most people are happy because many of us look at our balances in US dollars. Some look in Bitcoin terms, but I'm going to get to that in a second. Now, I want to focus on how Bitcoin is priced in dollars or versus Tether. That's the metric many use. But when trading a spread to get into, I'll say, another major, more often than not, people use Bitcoin to enter Bitcoin Cash or Dash or Litecoin or whatever. So this chart doesn't exactly have that same flavor of making new highs today. Let's take a look at Litecoin. Wow, that's actually making new lows versus Bitcoin.
Steve, tiny note, do you mind adjusting your screen really quick? We can only see, there we go. It'd be nice to see your face.
Oh, sorry.
Thank you, sir.
So here's Litecoin making another low in Bitcoin terms. Here's Ethereum Classic making another low. So you can see that this is really a rally of Bitcoin, and hence it drags the other cryptocurrencies along with it, but they're depreciating versus the asset that they are marked against, or most often traded against, it seems. And on that note, that would be the end of my presentation.
I have a question for you, Steve. I noticed
Sure.
you didn't really get into gold, which seems to be the asset that's had the least ding on it. Can you speak to that?
Gold?
Yeah.
Well, it really had the delay factor, and I'll show you right here. It was essentially stuck in the mud and really didn't rally until yesterday, where it tacked on about $150 in the past 20 or like 48 hours, but most other assets were starting in this band. And in this case, gold seemed to really catch a bid based on Nancy Pelosi being on CNBC and most of the, I guess, major news outlets via television were talking about 1 trillion, 2 trillion, when 2 trillion is seemingly going to come out of thin air, my belief is that people want to own things, not companies in this instance, but something that, rain or shine, I'm going to own. Whether that's food in the event of coffee, wheat, cattle, whether it's a Bitcoin because it's on my phone or it's in my safe or it's on my computer, or in this case, like I said, gold was the least affected, I guess, on a longer term basis, but it was the most delayed reaction yesterday, and it's been a 1-day rally. You're right, it lagged, but it has the belief that it's a safe haven. But I would emphasize to you and other watchers is that the driving force in this, and this is what I've traded or been involved with for many, many decades, is these are futures. The futures drive the cash price, just like the leverage trade is driving the Bitcoin price in cryptocurrency markets. So despite there being only X amount of gold in the vaults at the COMEX, this is what the driver is, and somebody bought, and then they kind of all pile in.
Steve, do you mind if I jump in and kind of summarize what you and the CoinGenius team have been saying over the last few weeks from our Genius
Sure.
calls?
Yes.
Awesome, thanks. This might help answer Joel's question. So in summary, and Steve, please correct me if I'm wrong, and team collectively, please correct me if I'm wrong. But what we have seen is that starting in March, basically, someone needed to hit the get out button. The long positions were really bad; they were overextended, and that's why you saw them buy Tether at 107 just to get out of Bitcoin. When you have leverage positions, your swings are a lot bigger. It gets very technical. Point being, they had to get out, and you can see that they hit the get out button across the board. We've been saying for a long time that, the recession is coming, that there will be this transition to digital currencies, that there will be this transition in the global economic engine. And I was saying over the next 10 years, but I think we're looking at like a year. So Steve has like specific triggers to show that everyone in the world was like, we got to get out. And you saw gold and silver prices start to change behavior. You're seeing commodities change behavior right now because there's not enough food. Food is spoiling. We're in a recession. Behavior is changing. Social behavior is changing. Physical behavior is changing. And that all has an impact in the market. To your point about gold is generally considered a safe haven, but on those days when they hit the get out button, even gold and silver suffered. Everyone was kind of cashing out. It's called liquidation or licked. And that's basically what you saw the big boy players do across the board. So right now, to your viewers, if they are holding in their 401k, if they are not in a cash position and they're really heavy on stocks or speculative bets, they need to educate themselves. And that's kind of what this call is about, is really digging into how do you educate yourself? What are these things called cryptos? Why are they not apples to apples? How is it like gold? Is it a hedge against fiat? It's not. It's still very speculative. But it is the fabric of this technology for digital transactions, whatever that looks like. And that basically creates a safety net for this recession that we're walking into right now. With that, I'd love to turn it over to Team Genius. Feel free to jump in and pepper some things. Oz, I know that you have a lot to say about the stimulus package. Samson, I know that you have a lot to say about the reality of the impact on the economy and the world after that. Maybe we can kind of unpack that and the rest of the team can kind of pepper in after that. Does that sound like a good next plan?
I think that's fair. So it was interesting what Steve had alluded to over the past 2 weeks. This has been going back and forth. And, on the one side, we had challenges with Pelosi stuffing a whole bunch of pork barrel legislation in there. I mean, we had millions of dollars going for a JFK auditorium. You had
quick side note, everyone factor in everyone's bias. It averages out to a really interesting perspective.
Well, but there were my friend Harmeet Kaur Dhillon, who is a Sikh American and one of the California RNC chairs, just authored something on this. We should be looking at, movements towards secure digital voting, blockchain voting, these types of things. And what we got on the opposite side of it was policy that's actually going to put more people at the ballots in contact with other people, creating just additional risk, and at the same point in time moving us to multi-day voting, which in and of itself is reasonably problematic. But those sort of points aside, the policy that's being voted on inside of the next hour, that it looks like we've got alignment from Pelosi, from the Senate, and from President Trump, speaks to a couple different points. One is that we're going to have $1,200 per household that's going to be payable to anyone who's earning the $75,000 a year threshold or less, as well as a $500 per month per child earned credit. We're going to have $130 billion that's going to be focused at the hospitals across the United States, as well as the Phoenix supply chain that's just starting to ramp up right now. We've got $500 billion that's going to go to larger industry in a mixture of loans and guarantees, which will largely amount to at least keeping most of these industries from going bankrupt, because at the end of the day, the perspective is they go bankrupt, we lose all these jobs. And then lastly, you've got $367 billion that's going to be allocated through the Small Business Administration. If you need the links on how to apply for that, that's up to $2 million worth of loans to supplant your business, your payroll, and your operations. That's available at sba.gov. But tweet me, Sultan, and I can send you the direct details on that. And then what we're looking at is that the 6.2% wage tax will not be paid throughout the remainder of the year, which at least opens up some additional capital for employers. Now, we expect this to probably have a splash in the markets in the next day or two. And mind you, the markets have been, down several thousand points, up with a massive rally yesterday. But a lot of what we're looking at is real-time market movement indicators based upon the perception of, one, where are we with Corona, and two, how are these countries, not just the United States, dealing with Corona on a broader base and a longer term. There's a tremendous amount of questions right now that are back and forth. And, with President Trump, it's always a little bit of zigs and zags. He does keep the media guessing, but I don't think he's going to put Americans at risk the way that, we've got some southern states still trying to figure out what they can do with their beach policy. But we are most likely looking multiple more weeks inside of a quarantine. We definitely have the opportunities for, at-home work with a lot of Americans that are now realizing that if this wasn't the case before, this is something they can do. But when we start looking at most of your trade and unionized jobs, we're still seeing not just a racial divide, but a digital divide across America, and then similarly in Canada and Mexico. The longer term impacts of what we could be looking at is stabilizing forces from this large capital influx that's going to come in the form of multiple stimuluses. There is still a echo effect or echo question of what's going to happen with the supply chain. I'll give you a case in point. Half of the armchair pundits that I'm seeing on Facebook and Twitter are talking about a strong and rebounding China. Wuhan is coming out of quarantine, okay? The entirety of Hubei province is going to start coming out of quarantine. But you still have 94 to 96% of supply chains of your Fortune 10,000 companies disrupted in America. And this is a significant challenge because instead of just saying, hey, maybe we could just rebuild and retool these supply chains, a lot of folks are looking at getting out of China. India was a strong move previously. Vietnam is another strong move. Malaysia is another strong move. There's also challenges that are being raised because of ongoing trade tensions and trade negotiations that have stalled because of what we are dealing with in the global coronavirus pandemic. And then there's those same echoes that are going to be felt in continental Europe. Brexit did a fantastic job of really extracting Britain and the Commonwealth countries from the thumb of the EU, but the EU can't pay for a tremendous amount of things right now, including a lot of their federalized programs, a lot of which lends to the socialized programs that people tout in America so dearly. That's going to become a much bigger problem when you are not seeing the revenues over the course of the next 6 to 8 months, as well as the cascading impacts that you may have to industries across Europe. And then that raises the last question of nationalization of certain industries. By all means, we've seen Italy do this in wartime before. We've seen different European countries do this to a small degree. Will that be what's necessary to keep some of these industries operational? At the same point in time, what are going to be the long-term cascading impacts of suspending the entirety of the banking system for payments across a large number of realty properties, and that's both commercial and residential? In New York, we're looking at, rate stabilization and potentially some rent cutbacks. You're seeing some impacts that are looking across the United States, but I often think more than not, folks are going to be saying, hey, why don't you look at the available government bailouts that are pretty much at war level? I mean, this is World War II level of spending. But, the touch points or the flashpoints we're going to have to continue to look at are, one, a volatile stock market and potentially a slightly less volatile crypto market. Two, huge challenges for any kind of transportation logistics, as well as air freight and air transport. And then lastly, where does, I think we've talked about this for weeks now, but where does blockchain fit inside of all of this? Because for the first time, we don't just have use cases, but we have actual cases in life of where the technology could not just improve the quality of what's being delivered, but prevent a lot of the fraudulent product that's hit the market already. California had seen fake test kits and fake masks. I only anticipate that as the demand goes up. And by the way, masks are currently on the wholesale market to government selling for somewhere between $360 and $540 a mask. These are the things that I think we need to keep in mind as we start looking at this pandemic over the course of the next 16 months. And then also how we need to factor in, additional policy that may be needed to be attentive to making sure that the markets don't collapse as we move from 3.5% unemployment to 5% unemployment, and ostensibly to some of the unemployment that we see in places like Harlem and Providence, Rhode Island, where joblessness has been an ongoing problem, but because it's a microcosm of larger markets, you don't see that impact.
Lots to unpack there. So Oz, I'm going to highlight a few more things from the things that we discussed yesterday. And that was, as you spoke about supply chain and blockchain, just food distribution as a whole, and, less depots for folks to be able to stop at, which ties into the price of gas going down to, potentially under $1. And you mentioned, that we've kind of stopped certain practices on the production of oil, and that those are kind of event triggers as well. So I do think that we need to be more.
I just want to throw one more thing out. Travis, right? How much are you paying for a gallon of gas right now?
They're in Kansas City. Okay, that's not the same thing.
Answer the question. Travis, right? How much are you paying for a gallon of gas?
$175.
Exactly. We're moving back to 1980s prices. That was my only point.
I do actually remember when it was 89 cents a gallon, so that would be interesting. But if I ever see that here in California, my jaw will be on the floor. So you mentioned gas. I mean, I think that's the commodities behavior is what we've talked about for so long. That is really the biggest break of the event trigger to show that things are really happening. And I do think that the audience needs to be prepared to see unemployment go up to 20 or even 30%. And with that, I'd like to turn it over to Mr. Samson Williams, who needs to rebuttal some of the things that we've seen. But after Samson is done, I know we usually go full roundtable, but I think everyone's going to have to fight for it a little today and just kind of jump in with your video when you're ready to talk.
Hey, what's up, Kristina? My name is Samson Williams. I love listening to Oz talk because I sometimes think I'm a rational person. Then he says some things, and I'm like, maybe I've drank the Kool-Aid and am nuts. And so I say that because he brings such an interesting perspective because so many people think this way. And first and foremost, I do have to say, the Kansas City Chiefs are the best football team in America, hands down and forever. Because unfortunately, I lost a bet to Travis and Joe about the Kansas Super Bowl. But anyway, there he goes.
Aw, shucks, Samson.
Yeah. When we're talking about blockchain, I made a couple of notes. I think one of the things that we've seen in medical licensing and getting doctors to work across borders, right now they can't do that because you can't just show up in Florida and go to New York and say, hey, I want to help, because there's no way of credentialing people. So right now it's because the doctors and clinics have to pay for that service. The pandemic is going to show that, hey, we should just make this automated, put this on a blockchain so that this information is more or less publicly available, so that doctors and medical and healthcare practitioners can just show up and help. One of the other things that we've seen in a benefit of the pandemic is what has happened for telehealth and telemedicine. We were struggling to do that for 15, 20 years, getting telehealth and telemedicine off the ground. And lo and behold, you can actually get it done pretty much overnight. So shout out to Cisco for making that happen on the back end, on the infrastructure. I'm super interested to see how they actually make these payments. They're saying it's based upon, for the coronavirus stimulus, they're saying how they make these payments to the folks, for the people who qualify for $1,200 a month. Remember, that's a one-time payment. If you make over $100,000, you're not getting anything. And if you live in anywhere that you're worth living, New York, California, DC, Miami, pretty much everybody makes over $100,000. How those funds will be actually distributed, Oz thinks it's going to be some kind of process through the Department of Children and Families, meaning folks who run TANF and WIC. I don't know how that's going to work because that's only approximately 150 million folks. So it'll be interesting to see what new ways of innovation they adopt to make these payments happen. Joel mentioned gold earlier. I think silver is the most underrated asset, because I'm in the boat with Steve Quan. I like to hold on to stuff, physical, tangible things. And I think that after all of this is over, copper is going to be the most underrated physical commodity and asset, because copper ions, they're electronically charged particles. And if you've taken a virology class, the coronavirus has an envelope and the copper helps pop it. And so you're going to see door handles, light switches have copper plating, etc. Again, this is just going to help for the future. Because when I put on my, Joel's got a copper. What is this, Joel? What are we looking at?
That's it. That's an ounce of silver in a Litecoin likeness.
Okay, excellent. Yeah, I'm a big fan of silver. So coming back to the coronavirus and some of the things that Oz mentioned, I don't know if you guys remember how TARP and HAMP worked back in 2008, 2009, when we bailed out all these industries. I was a bailout baby at the time. I was emergency manager at Fannie Mae, so I got a bonus. I was super happy. Thank you, taxpayers, for making that happen. So in this go around, the folks are trying to figure out, the folks in Congress and Senate, some of them are trying to figure out, how do we make this one-time payment of $1,200 actually get to those people without benefiting Wall Street? Because every decade or so we bail out Wall Street. One of the things I would love to see is that we don't do loans or notes, we do equity investments. I know that sounds like socialism. I don't want to privatize. I don't want to socialize the industries. I want to be an equity shareholder in them. We give $150 billion to the airport. I want to have a share. I want to have a dividend of that. I would love to see that. Oz did point out something that everyone should be aware of. This first round of $6 trillion printed out of thin air, I don't know where they got that much ink from. That's a stimulus number one. We should anticipate stimulus number 2 through however many it takes. As the Federal Reserve said on March 23rd, which is actually just 2 days ago, they have unlimited stimulus for recovering from the coronavirus. I think that what this shows, all of these events shows, is that the US is connected to the world. When we sneeze, Europe gets a cold. When something happens in China, it impacts us. When we have an America first mindset, it often shrinks our global view. And so I think that at the end of all of this, China wins, because they'll have the soft power, the social capital, and they've already been using through their Belt and Road Initiative. They've been developing those relationships globally that America has withdrawn from over the past few years. This is actually a really big concern because ultimately, yeah, it's tragic that a few million people die because of coronavirus. What's even worse, if the American way of life and Lady Liberty herself are bankrupted and unable to continue. And I'm going to end on this note. The Green New Deal and Medicaid for All is a quarter of the price of our current stimulus package. And remember, this is only stimulus package number one. And hurricane season is coming, which is going to be very exciting, as is whatever you call it when California and the West catches on fire for months. That's coming too. If you think a respiratory disease is interesting now, add in smoke and ash to a quarter of the US's population, and then we'll revisit these numbers.
I just wanted
that entire time. So let's see how that shakes out with having the money to move when you have hurricanes and fires. Sorry, Oz, go ahead, and then I'd love to hear from Josh Lawler.
Yep, I just want to add a couple of comments. The Green New Deal, as it's baked right now, if you read it on any of the candidate sites, is half baked because what they're talking about is a whole bunch of government and initiatives for grants. I work in academia, and that's not going to get us there. What we do actually have right now, which is very interesting with the economic incentives that are being pushed out, and I agree, it's $2 trillion to start. By the time this thing is done, it could be as high as 10 trillion. And a lot of this is going to be to abate stagflation. We're going to definitely continue to be dealing with negative interest rates. Look, the Fed is lending up to $1 trillion a day to large banks just to continue to keep these things propped up. And we may see some debt writing down inside of 2021. And there's a lot of things to be looked at here. But the bigger thing I think we should be looking at from the American perspective is the opportunity for innovation to take hold. There's some conversations I can't speak to, but I can tell you that on a federal level, there's multiple blockchains that are being looked at. On the national level, it's at least being looked at inside of the logistics and transport industries because you've got to prevent fraud. But the bigger pieces of this, and I'm going to tell you, is with oil at $20 a barrel to $30 a barrel, and I think currently light sweets hovering around the 28-35 range, we now actually have a fiscal imperative to start looking at industries for clean energy that make more sense for all Americans. And this is kind of like the inflection point I think we've needed for a long period of time.
You and I talk about that all the time, so thank you for that note. I got a little eager on there because you and I talk about that kind of stuff. This would be a really good time for us to leverage blockchain and consensus building around democracy about what should be in a Green New Deal, because I do think that the data shows that you save money over the long run if you invest in these kind of technologies. And I think a lot of people just don't understand what blockchain is. It's a ledger, like a checkbook or an Excel document, but it's written in like permanent marker and not pencil. That said, really good transition over to our legal expert here at Team Genius and our own personal CoinGenius lawyer, Mr. Josh Lawler.
Thank you, Kristina, and I apologize in advance if my bandwidth is horrible, so if it is, let me know. I'll turn my video off. It was really actually wonderful just listening to everybody speak. I've got maybe some different concerns, and I guess, being lawyer, I'll start it off with legislation, as I'm sure some of you guys are aware. The House version, one of the drafts of the stimulus package, included a provision for digital dollars, and that caused kind of a little bit of a stir. But if you actually look at the language, it talked about a ledger, but it didn't talk about a distributed ledger. And it was, set up in a highly impractical way. And I think somebody basically just kind of threw it in, and the next draft it was, but it's still an example that unfortunately the powers that be are mostly uneducated. So from that perspective, I'm not too full to see anything too fast. Against that background, we had the decision come down in the SEC versus Telegram case late last, and the court found in favor of the SEC for preliminary injunction against Telegram distributing its grams on logic that I find questionable. Personally, I'm hoping that there'll be an appeal. Not to law geek out on everybody, but basically what they did is they conflated the idea of a purchaser and an underwriter, so that they had, the intent of, these high net worth to purchase initially for purposes of, was it a security, but then they called them underwriters, which, those things don't necessarily go together, or at least they never have before, and the logic's not so wonderful. So I'm not super hopeful about, the adoption curve now from government. The government, I think, is still not, is behind the 8 ball. A few of the other things that I'm, maybe less legally oriented but concerned about, there's been mention of the fact that, we're improving technology. And I think that, a lot of the jobs we've been talking about before coronavirus, the blue collar jobbing away. And I see this as really kind of an accelerant of that. So what I'd be concerned about is that we're not going to actually see those come back. And that as the stimuluses are repeated over and over, what we really are going is universal basic income. Nobody wants to call it that. And I'd be curious what people think about that tag to it. But I think that's kind of the direction. The other piece that I'm confused about and would love to hear from people who are smarter than me on discussion is, my understanding is that a lot of the dollars that we're printing out of nowhere, we're using to buy foreign currency from other countries who still like dollars and whose currency is even more messed than ours is. And that is potentially serving as a hedge against inflation that I would otherwise expect would show up when you start putting out massive quantities of currency. So if anybody wants to speak to that, that'd be wonderful.
Actually, we need to pivot to Kyle, Morgan, and Simon. And I think that their trading expertise will lend a lot of insight to the macros of how that factors in. The foreign currencies behave differently these days. Let's just put it that way. You guys want to jump in on video, and I'll let you guys kind of round table a little bit of everything here. Hey, Morgan Steckler.
This is Kyle. I don't know if I can get video. It says privacy camera, something or other.
This is fine. Feel free.
Okay. So just a couple points. First of all, my name is Kyle Ray. People know me as Crypto Kyle in the crypto space. I've been in the space since 2016, and I've been trading pretty much every day since 2017. A big gap in 2018, but I'm always paying attention to the markets. So to me, it's kind of like a game of chess. That's kind of how I treat it. A couple of points I wanted to make in follow up to like what Samson said about smog and stuff like that. In fact, the people staying inside and everything shutting down is actually cleaning up the environment. So I want to give some uplifting information before we get into trading real quick about the entire world. Okay, everything is kind of a yin-yang balance. If one thing is negative, there's always something polar opposite to balance it out. That's just how the universe works. So when everybody is stuck in their houses and we're not polluting and driving, doing all this stuff, the smog levels are actually going down. People such as myself can actually breathe a little bit better. I know Simon had said something about that too yesterday in our private group. Other cool things to look at is this is a big opportunity for online entrepreneurs because now they're sitting at home. They have a lot of time to think. Essentially, human life is on timeout for the destruction we've caused, which we have. Humans are destructive by nature. Now we're stuck inside of a house where we're getting literally spoon-fed information. So the people who have legit information are the ones who are going to help the most people or provide the most solutions, solve the most problems. Now that a lot of the human race is stuck inside, we have more time to think. When people are working 9 to 5s, we're so worn out that we physically get home. We just want to watch TV, which is full of oftentimes propaganda and stuff like that. So now we have times to like read a book, appreciate our loved ones, notice things like when there's no distractions and all you need is food, water, shelter, and human relationships, we're focusing on those things more, which actually helps and benefits us even more. So to look at the positive side of all this, because there's just so much negative information coming, which we have to look at it subjectively. Just how can we get out of this in a positive manner and like succeed, right? So that's kind of my stance on this whole thing. Now talking about crypto, none of this is financial advice. This is just my perspective. There is a way to start making money in crypto. Now, a big kind of conversation that we had within our group privately and stuff like that is a lot of shillers, and there's like a lot of really good marketers, a lot of like influencers in the crypto space saying buy Bitcoin because it's going to decouple from the dollar. And you know, like, I forget already who said this, but it bounced faster. I think Steve said this. It bounced faster than like gold and stuff. But here's the thing. It's super volatile. Anybody who's been in the crypto space long enough understands that whales own the space. They manipulate the space, especially at these low prices. Every like dollar is now a higher percentage than it was when the market cap was double or triple this. So one whale could come in and literally just collapse everything. We already know Plus Token kind of kickstarted this downtrend, and a lot of people are saying that was the issue, not the coronavirus that tanked the crypto market, because they were selling off like a ridiculous amount of Bitcoin, and then a lot of stop losses got triggered, a lot of shorts got liquidated or longs got liquidated, and then a lot of FOMO sellers and stuff like that. So then everything just like went excessively out of control. So what do institutions do when they buy in and they're smart money? They buy into a stable coin and then they look for a trade opportunity. They don't immediately buy into Bitcoin, which is already volatile. So the big issue is, where are you getting your information? And most people, since crypto is an investment space, if we're going to use it for real world spending, then why are we using a Bitcoin that's going to move up and down and can be manipulated? It could go up 30%, it could go down 40%. People who are in an economic recession and only have a little bit to survive and they're struggling now are going to look for solutions. If they're going to just go buy Bitcoin because someone said buy Bitcoin because everything's tanking, what's your game plan? What's your strategy? Are you treating it like a business? Do you know how the market moves? If you buy in now, just because someone said buy in, what if it just pumped 30%? And a lot of FOMOers are coming in because they have no investment strategy. So now, immediately after that happens, it goes down by 10 or 20%. They sell. They just lost 10 or 20%, which is huge for someone in a recession or in general. So my big issue is, don't go buy Bitcoin. Have a game plan, get educated, and then invest. And if you're an investor, not just buying and holding, the market goes up, goes down. We don't know what's going to happen. People in the crypto space like us are pretty confident that eventually it's going to go up. But the use case right now in the security that exchanges pretty much run the crypto space. Tether itself kind of runs the crypto space. Manipulators run the crypto space. Anybody else is chasing. So unless you have a solid strategy, game plan about how to approach it, risk management, stuff like that. I mean, I lost a lot of money too. But the thing is, I know how to get it back.
I have to interrupt, and I'll kind of wrap it up here just real quick. If you don't already have a trading strategy, do not try to climb to Mount Everest on your first try. You really need to educate yourself, and there are people out there that will help you. CoinGenius will help you. Kyle will help you. Morgan Steckler will help you. All of these people on the call will help you because we care about everyone like getting this information. Sorry, Kyle. We only have a few minutes before we have a very hard stop, and we won't be able to get to everyone. We'll probably have to do another one of these. But I'd really love to hear from Morgan and Simon really quickly. Even if you guys can just introduce yourselves and just kind of say a few opinion pieces so that people can get a sense of what you're all about, that'd be really helpful here. And hopefully we'll be able to expand this further.
Hi guys, Morgan Steckler here. Just not going to take up too much time, but 20 years I've worked in the U.S. retirement account arena, focused on precious metals, gone to crypto about 2012 and 2013, started a few companies making it legally compliant to put cryptos into IRA. Always have had a passion for the precious metals because of the forms of what it represents in terms of true money, where it's fungible, exchangeable, transferable, transportable, and has a store of value. in and of itself. That's what got me into crypto. Now, what we're seeing is there's a lot of panic going on, and a lot of people have already talked about that. You've seen IRAs and 401ks lose 30% with this huge drop. So people who don't have $400 of savings to make their rent are panicking, panic selling. And when you're seeing a helicopter drop, you're seeing this time of war, a different kind of war, if you will. You see people going back into the hard assets, or the assets in which are a safe haven. That's historically been gold and silver. I think it was Samson said earlier that he believes in silver and copper. Silver is a really interesting play. Historically, the gold-silver ratio in terms of history of money has been usually a 16 or 20 to 1 ratio. You know, as of today, we're probably 110 to 1 ratio. That's a huge disparity. And when you look at gold in the 1600s, give or take, compared to its all-time high, and silver trading at maybe $15 or $16 right now, where it is in terms of its all-time high of over, close to 50, you can see the massive upside. Not that this is any financial advice, but you're seeing the opportunity of people to get into something that is tangible. I also consider Bitcoin the same arena because it is the newest form of digital money, but having something in your hands that you can use to buy your basic needs, to have your shelter, your food, your clothing, this is important in these times of need. I can really go into it further, but I'll leave it here for now because I know Simon needs to talk, but any questions, I'm always here.
Thanks, Morgan. We'll get everyone's info out there too, and I'm sure we'll do a follow-up. Mr. Simon.
Yes, hello. Can you hear me, see me okay? Yes, I think you can. Yeah, so my real quick background, I started off on Wall Street working in mergers acquisitions for the Royal Bank of Canada. Before then, spent a little time at Credit Suisse on the ECM desk. And then since my time at Wall Street, I pivoted into big technology, big enterprise tech sales for the Fortune 1000, and then started 2 companies since then, one of them being in blockchain, doing some personal investments as well as more so consulting early stage blockchain companies, connecting them to my network in the Fortune 1000 for adoption, and then just management consulting style, operational development and digital transformation, just transformation strategies for taking these companies that were, just raising, the initial seed Series A type investment in the crypto markets or traditional equity markets, helping them on everything else they need to be. My take here is, I'm in, for anyone in Los Angeles, I'm in a couple groups that have some really amazing people that are tied into the federal government and the FDA and others that are looking to help from a private standpoint with PPE attainment for these hospitals and clinics globally, as well as some manufacturers in Asia that I'm tied into as well. From a markets perspective, I've been more so closely watching the traditional markets than the crypto markets here, for a couple different reasons. But one of the things that's really stood out to me that I think people are talking about more and more now with QE, quantitative easing infinity, is more so what's going on with the new leverage that the Fed has into buying into new products, new debt products. So now the Fed, as of last take, I'm just kind of reading something that I always look to on Seeking Alpha. They have 6 new credit facilities that they can buy into, including money market mutual fund facilities, secondary market corporate credits, term asset-backed securities, and also purchasing in the ETFs and whatnot, and just basically printing money, right? And you can see around the world that the US dollar compared to the Australian dollar and many others, it's accelerating in such rapid pace that I was speaking with somebody yesterday that's a former 17-year investment banker, basically told me when the world catches on how in debt we are to everyone, they can make us pay for it. It's a matter of time, and probably looks like China would be the first to test that.
Yeah, Samson's been saying that for a minute. So I'm just going to time out real quick because we only have 2 minutes, but I'm being told that we can keep recording after. So Team Genius, please stick around. So sorry, Simon, we want to hear all of that. And so we're actually going to carve out more time as a matter of fact, if you guys just want to book the next 30 to 60 minutes, because Samson and Oz haven't even started debating, and we've got so much to unpack there. Really quickly, Travis and Joel, I know you guys have to run, but now's a really good time to plug the CoinGenius virtual conference coming up on Good Friday, April 10th, where we will have Team Genius there in a live dynamic situation to answer many, many of these questions. So Travis and Joel, would you guys like to say goodbye, and then we'll kind of just keep going down the rabbit hole after this?
Yeah, I'm sorry we're going to miss this debate, but I'm glad this is being recorded, and we'll be putting a copy of this up in the Bad Crypto Mastermind group on Facebook. If you're not in our private group, it's at badco.in/mastermind, and it's where we've got some great conversation. Thanks for having us.
Thanks, Joel. Thanks, Travis.
Yeah, thank you, guys.
Also a good time to plug the CoinGenius Discord, which you can find on the CoinGenius website, coingenius.ai. With that, Samson, I know you're chomping at the bit, and I know the team is ready to jump in. So quick reminder, if you want to jump in the conversation, turn your video on, stay on mute, raise your hand, whatever, communicate, and we'll try and pass the baton as much as possible here, because I can't wait to unpack all this. Simon, can't wait to hear more statistics from you. So sorry I had to cut you off there. All right, Samson, you have the floor, sir.
Hi, I'm Samson Williams again. And so I just want to point out, Oz said that the US government might print $10 trillion, and no one said anything. And so when money becomes a confidence game, I'm going to go with Bitcoin or with some type of cryptocurrency, probably Doge, because I love Doge. Because once money becomes a confidence game, this first stimulus, it's not 2 trillion, it's 6 trillion. We might get up to 10 trillion. And this isn't just in my lifetime. We're talking about in this fiscal year. I don't even know if you could have a fiscal year if you're just going to continue to print money. So I just want to point out that when, to the gentleman's point, I think it was Morgan, when he was talking about when the rest of the world realizes how much debt we have, it's going to dynamically change the hegemonic power structure. And so this is why at the end of the day, I still like to hold some Bitcoin, because when Steve Quan has a chicken and I have some Bitcoin, we want to trade. That's what it's going to come down to, I think.
Samson, I have a question for you.
Shoot.
What brought you to Dogecoin? I know it's not, this is just a personal, because I'm a fan as well. I was just curious, just personally.
Oh, hockey stick, man. I forget when I first bought it. It was like fractions of pennies, and it's just been such a great player. I think one of the better coins that worked out for me was Art Bytes back in 2017. It was just hockey sticks. And so, and if you actually look for if you want to use a currency, Doge does what a currency is supposed to do. It's a medium of exchange that we agree upon. And so Bitcoin just has better branding. And I love the fact that the Dogecoins guys occasionally, once every 2 years or so, they'll update their code. So if you're just looking for something to use to track transactions for a record of debt, go Doge.
I agree.
By the way, I didn't say they were going to print 10 trillion. I said that they're going to inject 10 trillion. And I think the term that this hasn't been, I haven't heard this in about 20 years, is helicopter money. And so literally what we are looking at is multi-tiered economic stimulus, which could be in the form of loans, bonds, guarantees, sureties, and the end game is going to be handing money out to citizenry. The other thing I think you need to think about too is, I'm up in Harlem, and I think Harlem is more emblematic of New York than people would think. Yeah, folks in Manhattan are earning on average about, call it 2.25. But I will tell you that the 4 boroughs, Upper Manhattan and the other 4 boroughs that pretty much power the city with working class, and working class in the city is anywhere between 75,000 to 125,000. These are the folks that are most at risk. And you also have to consider that we now have 8 states in full or partial shutdown, and that's continuing to cascade. That's where I think the secondary and tertiary stimuli are needed, largely because it's not a 1 month thing. They're looking at up to 4 or 5 months. They're looking 4 to 5 months for unemployment if you weren't able to, or you hadn't filed taxes in 18 or 19. so they can at least allow you to catch into some of that safety net. But I do think we're going to look at three tumblings to some of the stuff you've talked about. I agree with silver. I agree with copper. Oil will most likely go down to $10 a barrel, and that's because they don't have anywhere to store it. They're not stopping pumping it. They have no place to put it. What's going to end up happening is it's going to sit on ships, very much like it did during the oil embargo in the 70s. The second thing that I think we have to look at is these massive disruptions of supply chain and what the long-term impacts of that could be. China's GDP impact to the United States is only 8% of our total GDP. However, our impact to them is massive. They've injected, close to $100 billion into their economy over the course of the past couple of weeks just to prop up the yuan. If diversification of manufacturing happens, which has been ongoing since the beginning of trade tariff negotiations last year, China's not coming back the way anyone expects it to. And then the last thing, and in the same way that we're going to have multiple stimuli, I think that we may be looking at a second rebound of corona, and we may also be looking at hantavirus, which is now starting to take a hold of China as well. So, a lot of folks, going back to Dean Koontz, going back to a lot of literature from the 80s have talked about multiple pandemics. This may be something that we need to not just account for, but predict for in our new modeling, specifically going into the early 2020s.
I love the term helicopter money. I just want to know who's driving the helicopter, because this is why at some point we have to just agree that if you have something that has a limited quantity like Bitcoin, that might be better for the tracking your records of debt. Otherwise, let's just get more ink and print more money. And I do agree with you, because when we're looking towards 2021, after we get out of hurricane season, after we get out of fire season, it's like, what does that impact look like? Because if we have a nice category 5 roll up on America, or the West is on fire, my other question is, what are we doing globally to stem the next pandemic from occurring? Because the reason we're here is over like $30 billion for global pandemic response, which ultimately is like a rounding error, if that.
So I have to jump in. We've got many folks to kind of keep going, but at some point, it's just good common practice to save some money for a rainy day. And if we spend all of our money on the rainy day, how are we going to survive the next rainy day? And all I see is more germs and more this is not the last pandemic that's going to hit the globe. So we need to all be prepared for a whole lot of different diverse things. Josh Lawler, I see you over there. Go. Oh, and Jeremy Bournes. Everyone's jumping in. Yes. All right. Keep going, guys.
Jumping in. Okay. So since Jeremy is on mute, I'll talk. I'd like to hear from you guys a bit about the possibility of stimulating the economy through public works. Obviously, that's part of what went in the New Deal was that the bunch of different public works to keep people employed. I know in California, we have supposedly, according to our state treasurer, $1 trillion of structure investment that needs to happen. To the extent that we don't have tax money to pay for that, it's a problem. But if we've got helicopter money for $1 trillion, do we see any possibility of taking that approach and possibly taking that to replace some of those blue collar jobs that are being lost for truckers, et cetera? Anybody, any thoughts?
If you can go and take a look at www.council.exchange. So I'm a senior fellow on the National Minority Technology Council and the Council Exchange, both of which are these are organizations that were actually set up 2 presidents ago and were recently funded by President Trump by executive order. The first thing that's going to happen is by October, we're going to have money pouring into opportunity zones across the United States. Initially, it's top 10 cities. It's going to go plus the entire island of Puerto Rico. Then it's going to go top 20 cities. We're also looking at a massive tech transfer retraining and job education initiative that's going to happen with historically Black colleges and universities. That's also being driven by the administration. And then third, I think it's some of the natural stuff that we've been talking about here. inside of the next 16 months, entire industries are going to die. And a lot of these industries are industries that have significant amounts of middlemen, significant amounts of overhead, and honestly, not a lot of cascading impact to those people working inside of that ecosystem. Whether it is an increase in wind coming from Texas and wind farming, an increase in solar stemming from, additional subsidies that may be provided at a state level to help folks with electric costs, whether it is looking at it from the transportation infrastructure perspective of roads, rail, and whatnot, or really the bigger problems. The two biggest problems I see in America are, one, everyone sits there and pisses and moans about the ACA and healthcare. And I'm going to tell you, the ACA is part of a problem. The bigger problem is that we have healthcare fraud, massive healthcare processing costs, and hospitals that are billing consumers 3 times what they should be when they know they're only going to get paid 1/3 of that from either the healthcare companies or Medicaid or the VA. So looking at that from a technology shift perspective, and also looking at the power grid from a technology shift perspective, okay? Because I can bring all the green and efficient energy in that I want, but if I still have load transfer and load generation and load distribution problems and massive attrition of electrical loss shifting in between, say, New Jersey to New York, and the retirement of nuclear power plants, like when Indian Point, which I'm not in favor of because of how leaky the damn thing's been, but when Indian Point goes down, we lose 2 gigawatts. And New York, at peak demand during the summer, consumes almost 14 gigawatts per hour. So there's some major opportunities here, but I think a lot of this is really, look at what's being authorized under the Federal Defense Act. If you have a company that has the technology that can fix this kind of thing, there's different government folks you can take it to. And if you got a good enough pitch, I don't have a lot of pull, but I got some pull, and I'm happy to advocate for you.
So yeah, just want to jump in here. Oz, really appreciate everything you're saying. I want to bring it back to the crypto and the financial markets specifically. And by the way, this is Jeremy Bourne, CEO and co-founder of CoinGenius. We heard a lot of people discussing a lot of different angles, varying angles of how COVID-19, as well as the financial crisis looming, the printing of money, all of that is going to impact the world globally and in the US. The question that I have for the greater audience is, if you look at it in terms of a pair, USD to Bitcoin as an example, and you have this increase in monetary supply that's drastic, obviously in the trillions of dollars, versus something like Bitcoin that has a finite supply of the 21 million hard cap. What do you think inherently that is going to do to the price? Obviously, I have my thoughts, but I think just based on a conversation yesterday, I think there's some varying opinions here.
I get winded very easily. That's actually calling me.
Anybody want to chime in? I know, Kyle, you had some thoughts.
Yeah, I got some thoughts on this. I think we need to look at priorities involved in crypto. It doesn't matter how much the supply is. If the use case is not strong enough and there's still too much volatility, and still the whole world does not accept Bitcoin or crypto yet, just a very small fraction. Sure, we could transition to it, but how long is that going to take? Also, security issues, ease of onboarding use. Sure, anybody can go to Coinbase and buy crypto real fast, but then they're stuck with it, and then they're stuck with the fees that involved with just onboarding. And then if they don't, let's just say crypto doesn't go up, maybe it just trades sideways or tanks another 20 or 30%. People are stuck waiting and waiting and waiting, trying to get their money back or make some money. And if they need it now, then they're kind of screwed. So we got to look at the priorities of crypto in, like, maybe there should be somebody that writes up a document or something that kind of shows the barriers of entry before we even get to the point of, yeah, there's only 21 million. It can be tracked, and there's no disputes. Everybody knows how much money is, or how many Bitcoins is there and stuff like that. Those are secondary. Primary is security, onboarding, how many people accept it, and I'm sure more people will accept it over time. But right now, immediately, I see that there's just like so many issues that I've seen all over the place all the time. Scams. There's still scams going on every single day. Almost a dozen different types that I've known. So in my opinion, I think there's just a lot of issues that still need to be fixed first before, in my opinion, I would allow to open the doors to the masses. That's just my personal opinion, though.
Wow. I definitely want to answer that one. You know, the one thing that you didn't mention, use case, maybe not the big thing for me. You know, I do a lot of work in kind of both the security token and the quote non-security token world. I don't love the utility. But one of the things that I'm seeing here is, you know, I've never been a big fan of the fact that Bitcoin's use case originally doesn't function on the Bitcoin technology. You can say what you want about Lightning Network and all that kind of stuff, but there are some other protocols. Chainlink is a great example of one where, you know, I'm a huge fan. I mean, they've got a use case, you know, it's insane, and happens to have that supply and demand value gen factor to it. I think, you know, as far as quote crypto, as most people understand it, you have to get back to the fact that most of this stuff has got a use case. And if the use case is going to work, then the value of the stuff is going to go up. If the use case is not going to work, you know, you may have the store of value kind of argument, but everything's a store of value. That's you know, kind of a confidence game. The dollar of value, even when you helicopter in 10 trillion of it. And I'm saying the term helicopter. Thank you for that, guys. On the flip side, you know, one of the projects I'm working on is a company that handles issuance of security tokens in a way for tokenized income sharing agreements. It effectively functions as a form of assurance to the purchasers to kind of rubber stamp the fact that it's not a scam, if you will, that somebody's kind of looked into things and kind of put their butt on the line. And I see more things of that nature in DeFi also, which, you know, is a very exciting space. But, you know, I think, you know, if we're back at the 7 years from now, you might not be using the term crypto anymore. It's kind of, you know, that might be like saying, I don't know.
Oh, we lost him. Okay.
So I'll say one thing about use.
Sorry, Kyle,
case.
1 second. I actually have a really good comment, and it will probably tie into what you're about to say, Kyle. So on that note, you won't call it crypto. It will have different buckets, if you will. And if you think in trading terms, in indexes and how commodities are changing and how everything is changing right now, the categorization of those buckets is changing as well. And so I do want to kind of crack open our index strategy, our rating strategy, our rankings strategy, the coin score strategy. There's a lot there. But Kyle, please, over to you.
It was just one quick thing I wanted to say in response. When I meant use case, I meant like as far as spending. As far as storing, like your wealth, that's a different story. Like Chainlink, you're not going to go spend Chainlink. Bitcoin, you would spend. Ripple, you would spend. Dogecoin, whatever people are going to accept. So my main thing is like
categorization points. I mean, those are
increasing your wealth. My whole point was, I guess I wasn't clear about this, was increasing your wealth, calculated increasing your wealth. If you hold, you're hoping. Obviously, crypto's going to go up over time, I think, in my opinion, but not in financial advice either. But overall, like right now, if we need immediate solution, how many people are accepting crypto? The people that understand it are. People that aren't still need to understand how to get onboarded safely and securely. That's all I had to say about that.
So from my side, question to the audience as well, and Simon, I think you can definitely chime in here. As far as traditional capital markets and, you know, people that are coming from equities or commodities, et cetera, as they have a new option in this new frontier of, the digital revolution, as we call it, right? Where you have cryptocurrencies, distributed ledger technologies, and different ways to diversify your portfolios. What are the people on Wall Street thinking, saying, feeling? How are they utilizing crypto? Is it a diversification tactic? Is it a pure speculatory play still at this point? I mean, how do they see this, and how do you see that transition from what we know as traditional Wall Street into this new digital world that I think we're moving into slowly, that's being really fast-tracked by COVID-19?
Yeah, here, I'll start off on that. We probably spent a whole nother hour on that topic alone, right? So what I'm hearing more so I'm kind of like, there's different buckets, right? It's what we're seeing, what we're reading, and what we're hearing, and what we're seeing, right, from the government is, even talks about digital dollar that was, was actually in the initial stimulus plan. I believe it was pulled out of that for now, but there's going to be more takes of, obviously, more adjustments and more stimulus packages to come. So I think, just seeing that, obviously, I believe caused, part of the Bitcoin rally back up to what it is now, $6,700 or so on that front. And to just breathe a bit of new life to it. What I'm seeing from also, because the halving is going to be coming up pretty soon, right? I think it was towards the end of May 20th, I believe. Upon this most recent 50% drop in Bitcoin and many of the other cryptocurrencies, I heard from exchanges that I know and from others, OTC desks and everything. This time, a lot of more institutional backers came in and started buying it up when Bitcoin dropped down to, into the 4,000s and whatnot. Versus before, it was a lot of miners a couple years ago and more of retail investors. So I think we're starting to see more institutional capital coming in, more so as a diversification play, like you mentioned. Some of them may be seeing a store of value. I'm also close with a couple family offices, and one that's a multi-family office fund of funds that touches over 100 family offices across Asia, the Middle East, Europe, and some in the United States. And they're starting to buy into it as well. They're looking at, just having, a small portion, maybe 1 to 2% at least of their capital in the digital asset markets, predominantly, Bitcoin, if not one of the top 3. And then we're looking to diversify away of whatever they're holding currently into buying into commodities, buying into the US dollar, buying into, select precious metals, not all commodities, but select precious metals, as well as distressed real estate plays and those tangible assets. Right. I think for long term, I'm going to be betting on, the crypto markets, betting on, digital assets coming to life, and especially those that are looking to work with select governments for adoption, things like that, versus competing against some kind of nationalized digital dollar, or those that are going to be helping in supply chain space, like Oz was alluding to, or others like Chainlink, whatnot. In the short term, I think there's, any kind of downturn like this, there's a huge flee into the US dollar. And so we're seeing that. I think we're going to continue to see that for a bit until, like I was mentioning before, until the world realizes just how much debt we are in as a society, and how we, there's huge burdens of treasuries and other instruments that other countries hold of ours, as the treasury now, dips into negative yields on the 1 month and 3 month, whatnot, what that's going to look like for us, where other countries have been dealing with that for a while, like Switzerland and I believe in Japan as well, negative treasuries. So anyway, long story short, we're going into a lot of unknown. There's going to be a lot of modeling, a lot of takes. I think all in all, this does bode well for Bitcoin, and a few other, select digital currencies that I see, being around for the long term and just gaining in value for various reasons. But then still in the short term, I see the US dollar accelerating, at least through the bottoming of this pandemic and a bit beyond. But that could be reversing course. Like I said, once these huge debt obligations come into play, especially those debt obligations where international countries that have their debt obligations written in US dollar just can't afford to be paying them off because the US dollar has risen up so much, and how that's going to play into the global quantitative easing. Because I find it very funny, not funny, I just find it very interesting how a lot of international markets jump upon learning of QE infinity and how serious we are, and how they're jumping up, and how we're jumping up as well, where I think long term it's not beneficial for us as a society in the US.
Yeah, I would actually 100% agree with you. And I think others on the phone have said it today. I don't think people understand what's really coming, right? I don't think there's enough, you can print as much money as you want. I don't think, what we've created here can be saved. I think there's going to be a lot of pain. Once again, not financial advice, but as we've seen very early on, when there's a tremendous amount of fear, as there was when COVID-19 first came out, and then we saw it come to the US, we saw it go to Italy, we saw it go all over the place. And now you see countries like, different places like Hong Kong. Hong Kong did an incredible job of containing it, but the problem is then they got too comfortable. People started going back to work, and then reinfection happens. The same thing is going to happen around the world. This thing is not going to end soon. Look at Australia, right? They're putting something in place where people are going to have to stay home probably for 6 months. They get it because they understand it's probably going to take that long, because not everybody understands the implications of this. Long story short, when we get into these extreme fear situations, and Steve Quan has said this over and over, and I agree, which is everything unfortunately goes down. Everybody just wants to wait and see what happens. They don't want to be in a speculative asset. I personally deem Bitcoin, similar to like Dan held, as a speculative hedge. It's not a true hedge yet. I think at some point when we experience extreme pain, there will be a tipping point, and people will start to understand we're home more. We can do more research because we have nothing else to do other than take care of kids if you have kids. But I think inherently because of that, the education that Bitcoin needed for so long will actually happen because people have time to dive into it at home, take courses, and learn about it inherently. And in some countries, they have no other choice because of their situation. It's so extreme, they're going to have to move into it. We're seeing it now. So with that said, I think we have a long way down before we go back up, but it's going to be exciting to see how it plays out.
Hey, Jeremy, can I add about 1 minute of thoughts and I guess an open-ended, thought-provoking question? The reason why I tend to say...
Only if you turn on your video, Steve. And actually, that's a really good segue, because I was going to ask you for last thoughts, and then we need to wrap up, and we'll continue this conversation next week. Everyone can come back and join us for Genius Wednesdays. So, Steve, I will turn the floor over to you, and then I'll do the wrap-up when you're done.
Okay, I guess the comment which Jeremy said is something that I learned in 2001, 2008, and most recent in 2011, and again now. When there's times of extreme market stress, when, yes, you see the whole board is red. You saw treasuries down, Dow down, Bitcoin down, Litecoin down, crude down. That means somebody had to get out, and I would pose this question to all of you. If your option was to feed your family and keep your house and keep your shelter, or sell your whatever, your Bitcoin at $2,000, I would sell my Bitcoin at $2,000 because, not because I don't think it's going up or down, left or right, but simply because if I'm not here tomorrow, you know the old saying, you can't take it with you. It doesn't really matter. And those are the kind of things we saw when you saw 10, 12 non-correlated assets. I'm going to touch on one thing on Chainlink, or I'm sorry, on Link, L-I-N-K, and XRP. Some would say, oh, that's Ripple and Chainlink. I'd say you're absolutely 100% wrong. And that is the problem in much of crypto. Crypto is a cryptocurrency a la Bitcoin is a commodity. You can do what you want with it. You know, Kyle said it. Many of you have said it. It's worth what I'm willing to pay, or what I'm willing to trade, what I'm willing to exchange you for it. Link is a smart contract, which many people like. Chainlink is the company. XRP is a token used by Ripple Labs. Ripple Labs is a company. Like when Ripple Labs goes public, I wrote something on Medium about this. I don't know what XRP is worth. It could be worth a lot more, a lot less, but I would guess that it doesn't stay at this price. And with Link, if you're hodling your Link in your safe, yours aren't being used. So I'm not sure that I fully agree. I'm a technical person, so yes, it'd be hard pressed to say that LINK has not performed tremendously. It has, but it's the same thing with Engine and many of the smaller projects. They're raising money to try their idea, and you have a token that's named ABC or LINK or XRP, and that's what it is. You have a token and you believe in them, hence you're giving them money. And if a day comes where there's a ton of market liquidity for that token, then yes, it's tangible. But if no, then like I said, it's just that's the use case in my opinion. Blockchains, third way of raising money. Equity, debt, now blockchain. That's it.
Agreed. There's a big difference between something that evolves as a idea and a white paper project and is raising money. You don't own a piece of that company. That token is a mechanism, and it has its own tokenomics and its own mechanics on a lot of different levels. So on that note, thank you everyone for joining us here for Genius Wednesdays, brought to you by the geniuses at CoinGenius. We encourage you to join the crypto conversation by participating in the CoinGenius Premium Discord channels, checking out our website at coingenius.ai, or you can always email us at info@coingenius.ai to comment on what you heard here today or discuss our consulting services. Also, as a reminder, we are having the virtual conference with digital seats 6 feet apart on 4/10, that is Good Friday. Until next time, this is Genius Wednesdays. Thanks, everyone.
Thank you. This has been
Hey,
great.
everybody on the call, make sure this is a